Up to $4 trillion has been wiped off global shares as Asian and European markets plunged dramatically this morning in the wake of Wall Street's record-breaking losses. Tokyo led the market's bloodbath throughout the region, with the Nikkei 225 briefly diving almost 7% before closing down 4.7%. Hong Kong lost more than 5% in its worst day since summer 2015, while Sydney and Singapore each sank 3%. By midday it had recovered to 7,154.26 points. In initial trade today, European stock markets collapsed by about 3.5%. Mirroring the dramatic falls across Asia, while the Dow Jones tumbled 500 points before recovering. World stock markets have now nosedived for a fourth day running, having seen $4 trillion wiped off from what just 8 days ago had been record-high values. The sell-off began last Friday amid fears inflation will surge this year and that the Federal Reserve will be forced to raise borrowing costs more quickly than anticipated. Other assets were also hammered, with a slump in oil prices hitting energy firms, while higher-yielding currencies have been hit by a flight to safe havens. Dealers in Asia tracked their colleagues in New York, where the Dow Jones suffered its worst points fall in history on Monday and wiped out all its 2018 gains, while the S&P 500 also took a beating to sit down for the year. In early trading today, the Dow Jones Industrial Average fell as much as 500 points, bringing the index down 10% from the record high it reached on January 26. However, the Dow quickly recovered much of that loss and was down 127 points, or 0.4%, at 24,255. The Standard & Poor's 500 index was down 8 points, or 0.3%, at 2,639. The Nasdaq Composite was down 6 points, or 0.1%, to 6,956. Meanwhile, Bitcoin has continued its spiral downwards after some banks banned their customers from buying it with credit cards. The news is the latest to hit the cryptocurrency after recent crackdowns by authorities in India, South Korea, China and Russia. The unit was down more than 20% to a 3-month low at $5,922, less than a third of its value near $20,000 in December. For many stock investors, the rout in markets is likely to have come as a bit of a shock, or at least a timely reminder that share prices can go down as well as up. Throughout the history of financial markets, corrections whereby indexes lose 10% of their value have been a regular and healthy phenomenon, as they shake out some of the more speculative players and bring share prices back to their fundamental levels. Craig Erlin, senior market analyst at Ahanda, notes that the rally over the last couple of years has been very strong and without any corrections of note as a result. He thinks that it's entirely possible that this has led to some complacency, with investors perhaps getting a little ahead of themselves. It's not doom and gloom, and it's not financial markets Armageddon. It's just a much-needed and much overdue correction, AxiTrader analyst James Hughes told AFP. There are 4 stages of a fall: hope, greed, panic and fear. We are not at fear, but we are at panic at the moment, which is only natural after 1,175-point fall. Global stocks have enjoyed months of surges fueled by optimism over the U.S. economy, corporate earnings and the global outlook, but turmoil yesterday was echoed across Europe, with the stock market down 0.8% in Germany, 1.5% in France, 1.6% in Italy and 1.4% in Spain. Fears are growing that stock markets are on the brink of a prolonged sell-off, with the FTSE 100 suffering its 5th straight day of losses yesterday. Futures markets show the London Blue Chip Index opening around 1.46% lower, a drop of 108.4. Nearly £28 billion was wiped off the value of share prices in the city on a punishing day for savers and pensioners with money tied up in the stock market. The FTSE 100 index dropped 108.45 points, or 1.5%, to 7,334.98. The blue chip index has now lost 5.9% of its value since hitting an all-time high of 7,792.56 on January 12, costing investors £117.6 billion. The slump fueled fears that global stock markets have peaked and are now set for a correction as central banks around the world, led by the Federal Reserve in the U.S., raise interest rates to tame inflation. The White House yesterday admitted it was worried. "We're always concerned when the market loses any value, but we're also confident in the economy's fundamentals," an official said. Throughout his presidency, Donald Trump has trumpeted the strength of the stock market. And despite the recent falls, the Dow is still up nearly 40% since the election. But Tony James, President and Chief Operating Officer of fund manager Blackstone, warned that further stock market falls were ahead. "People have been saying for a long time that stocks are overvalued," he said. "I think we could easily see a 10% to 20% correction sometime this year. We have got 5% already. Every historic norm says stocks are very fully valued." He warned that President Trump's tax cuts could turbocharge the U.S. economy to such an extent that the Fed is forced to raise rates by more than currently expected. Fears over rising inflation and higher interest rates have rattled investors in recent days, particularly in the U.S. An upbeat jobs report in the U.S. on Friday fueled speculation that interest rates could rise 4 times this year. It had previously been thought that the Fed would raise rates only 3 times as it seeks to keep a lid on inflation.
The freaks at.